All right, what's up, guys? So doing a little bit different style video than normal today. I have some slides and things that I want to show you as far as some current market data. What is going on in the current housing market, right? Does it make sense to buy right now? Are we headed for a recession? Are we headed for a housing crash? There's a lot of questions, and the media loves to just put all kinds of different information out there. So I'm going to share with you some actual facts and data based on, previous things that we have seen in history and how we can use those things to our advantage today to see if buying a home still makes sense. This answer is going to be a little bit different for everyone as far as does it make sense to buy right now? First thing I want to talk about, and I know I've mentioned it in other videos, is right now we are seeing unprecedented times as far as interest rates rising. Interest rates for the most parts are in the sevens, almost triple from what we saw, a year ago. On top of rising home prices, is it just impossible to buy right now? And should I just wait? I feel like 99% of the buyers that I'm talking to right now are going to wait until rates get lower. So let me just show you some information to see if that is the right choice. We've talked about inflation, right? Inflation is what is killing interest rates. We're all aware that interest rates are higher now, and it is because of inflation. So as inflation gets higher, we can expect to see interest rates get higher. So the real question is, when is it going to peak? So here's our current, situation right now. This goes back June 2021. And then, they've just been higher and higher and higher. The good news is we did get the October report out, and it came in at 0.3, which actually did cause a little bit of relief in interest rates. We saw them get better almost by a full percent. It was like 75 basis points within a day of getting that report. Now, we're seeing it kind of go back a little bit worse. We lost some of those gains this week already. This is important to look at. When is an inflation going to peak, and how does that affect interest rates and recessions? Next, we get into Fed hikes, right? And so as we know, the Fed has been aggressively hiking interest rates. And so this is what it looks like. So if you look at these little gray bars here, these are the recessionary periods. So every single time the Fed has hiked rates, a recession tends to follow. I mean, it's happened 100% of the time. Every time they hike rates, recessions follow. So we're about to head into recession, guys. The data is right there. We can see it right here on this little guy. It's doing exactly where we plan on it being. A recession's around the corner. Now, let's also take a look at the unemployment rate. So unemployment rates and recessions, as you can see, also have very similar reactions. So here we have how unemployment works with recessions. So as you can see, as the employment rate goes up, that usually happens in good times. People aren't unemployed. So if you look at these screens here, you can see, jobs were good, and then the recession hit and people had to lay off. So, the writing's on the wall right here. We have unemployment at an all-time low, which means we're more than likely going to enter recession. We saw a huge spike. Again, 2020 was kind of weird with COVID and everything, tons of layoffs. So that's when it peaked during that, recessionary time for COVID. And now less and less people. But what does this mean? That as we can see, it's the line's already down here to next to nothing, which means a recession is coming. Everything is pointing to a recession right now. So what does this mean for mortgage rates? Well, let's take a look at it. Here's what they typically tend to do. So this chart goes back all the way back to 1980, 1972 technically. But here's where we start to see the correlation between mortgage interest rates and recessions. 100% of the time in a recession, mortgage rates come down. They went from 16% to 11%, went from 18 to 13, 11 to 8.75, 7.3 to 6.75, 6% to 4.875, 3.7 to 2.75. So again, we're in this higher interest rate environment now, but it's not going to last forever. You can see it. It's written clear as day. Every single time a recession hits, mortgage rates come down. So based on our previous slides, we can obviously see that there is a recession coming, and that is going to mean interest rates are going to get lower. I mean, it just makes sense. You guys with me so far? All right. So now let's get into housing. Well, housing usually has to be pretty terrible during recessionary times, right? Well, here's another chart that goes all the way back to the 1960s. The gray boxes here are the recessionary periods, and this is housing. As you can see, it's continuously gone up. It's actually gotten better in every single recession except for this little guy right here, the crash of '08. And that's because the housing market caused that recession. So again, very different. One time out of, 1, 2, 3, 4, 5, 6, 7, 8, out of the last 9 recessions, there's only been one market where housing has done poorly. And again, we're all aware of why that is. I've done tons of videos explaining why the '08 crash. It's very different than what we're dealing with right now. So we can continue housing to continue to be good through the recession. So what does that mean? That means home prices are going to continue to appreciate. Let's talk a little bit about supply and demand, right? We got into it. That's kind of what causes everything is supply and demand, right? Let's look at '08. What caused that crash? Pretty freaking clear right here. So let me get into it. As you can see right here, the blue graph is going to be household growth or household formations. So keep in mind, what is a household formation? Let's say we've got a family of 4 people. You've got kids that have, graduated high school and they are becoming of age. They are ready to move out. Now that is one household that is going to become 2, maybe even 3, depending on the ages of the children. Data shows us that people really start purchasing homes right around 33 years of age. So if we look at back in '08 or '06, back when we had, these were the home builders, right? This little orange or yellow line or whatever color it is, you can see these were home builders. They were building like crazy, but we had a drop in actual household formations. And again, it would have been pretty easy for them to figure this out if they would have just looked at birth rates. So this is our birth rates from 33 years prior. You can see that they're down. And so again, it was let me go back to the previous slide. It was a very classic case of just too many homes and not enough buyers, on top of some really risky lending and just a whole bunch of other stuff that just created for the perfect storm of a housing bubble. Look at us today. Obviously we have the exact opposite situation in today's market. If you look at the amount of households that are being formed, we have a lot more households and not enough homes being built. So what does this do? This creates another supply shortage. And again, what will determine home prices? Supply versus demand. As we have not enough homes and more people looking to buy those homes, that will continue to drive prices higher. So again, all of this makes sense. So if we look at these birth rates, again, we can see that we are headed in a upward direction. If we look 33 years prior to from what that was, they're just, less people were being born. It was just how it worked out. Looking back at these household formations, right? What creates a household? What is that looking like? So right now, this is where we're currently at. This is our current situation with houses being formed. And if we look into our housing supply, well, we have about 1.4 million homes that are being completed. These are new construction homes. So we can't really count homes coming for sale on the market, because if someone is selling their home, obviously they still need a place to live. So they are going to have to buy another home. That doesn't create a new house. New homes is always going to be based off of construction and what the new home builders are doing. So as of right now, we have about 1.4 million. And then obviously some of these get destroyed due to whatever. This is just the data that we have. So we have a total new supply on an annual basis, about 1.3 million homes being built. But based on our previous slides, where household formations are at 1.7 million compared to 1.3. Now, this is important because builders are being cautious this time. They got killed last time. It was rough. The entire economy took a huge hit in '06 and '08. 2006 to 2009. So they learned their lesson. So they're not building as rapidly as they were before. But you got to remember, they're still not building enough to keep up with the current demand. We're behind the curve. Oh yeah. This is one of my favorite ones. So we talk about the scare, right? So you guys can see what a bubble is. I mean, we go back to, this guy here, current situation, not enough people. These are the people that need to buy homes. This is the homes available. That caused the boom. That caused the bubble and the crash. Now let's get into what the media is saying. So the media is saying, in fact, they've been saying since 2015 that we're in another bubble, that this is what's happening. Well, let's see what would have happened. So in 2015, if you would have listened to the news when they were saying that it's a bubble larger than '06, don't buy. If you looked at a $300,000 house, well, in 2015, we saw 5.1% appreciation, which means that home increased about that $300,000 home increased in value by about 15 grand, making it 315,000. Well, then they're back at it again the next year in August. We're in a new housing bubble. This is a new situation, guys. Don't buy a house. Well, if you would have listened then, going back to that, especially going back to 2015, that $300,000 home went up another 17,000. Now it's worth 332,000. If you did listen back in 2015 and didn't buy, now in 2016, a year later, you've lost out on $32,000 in equity on that $300,000 home. Here it is again, next year, November 17, home ownership doesn't build wealth, study finds. Again, this is the news. They're trying to sell fear. So they're telling you, don't do it, don't do it. Home would have gone up another $20,000 in value, making that home worth $353,000. And we just have example after example. 2018, it's better to rent than to buy. July 19, the housing market is about to shift in bad ways. Went up another 4%. December 19, next year will be hard on the housing market, especially in the big cities. Oh man, did they call that one wrong. 16% appreciation in the year 2019. That $300,000 home is now worth $443,000. And most recently, they're still telling us the same stuff, but this was as of last year. Housing boom is over. New sales fall to pandemic low. We saw an 18% appreciation. Now that sucker's worth $523,000. So if you listen to the news since 2015 and did not decide to buy, you've missed out on over $123,000 in equity just in this one scenario right here. So again, the writing's on the wall. The news doesn't, they like to sell fear. They have no idea what's going on. Let's look at the actual data. Let's look at existing home inventory compared to back then and now. I mean, it doesn't take a real genius to figure out we have way less homes on market available right now. This is the existing home inventory. This is all the way back from 99 till now. We can see that it hit its peak in 07, which was a part of the crash. And now here we are. We are at still just absolute record lows. How about this graph? This is another one they love to scare us. Well, there's new homes coming to market. And so with all these new homes being built and everything being done, we're going to enter another crash, right? Because again, there's too many homes and not enough people to buy. This is a downward trend. This is scary, guys. Well, again, this is a 1-year graph. Let's expand this graph a little bit, shall we? Very normal cycle. This one goes back 10 years. As you can see, when people are buying homes, they typically do it in the summer, and it always falls off during this time of the year in the fall and the winter. We're in that exact same situation. I mean, could you create a more consistent graph? Are you kidding me? This happens every single year. So yes, more homes are available on market right now. This is an opportunity. This is what I'm trying to show you. So don't let the news scare you. Active existing home listings in the US. July of 17, we can see a very similar graph. The overall trend is still down. It's going down. We don't have enough listings. So again, supply and demand, pretty basic stuff here. So let's talk about the real story. Because again, this one shows us that this is what's available. So if you look at the existing homes in the inventory, but it doesn't tell us the full story. You have to look at the ones that are already under contract. Almost half are already under contract. If they're under contract, obviously you can't make an offer on it. I mean, could it fall out? Sure. But there's only about 732 active listings available to purchase that are not under contract in the United States right now. Housing shortage, big time. Does that mean a housing bubble? No, it's the opposite. When interest rates do bounce back, we're probably going to see another buying frenzy. So those that aren't buying now, let me show you why it's a good time. Before we get into that, let's talk about more scary news that the news loves to throw out there. So this one just recently in July, dramatic increase. Foreclosure filings are up more than 150%. Foreclosures mean that we've got a recession coming soon, right? That's what everybody tells us. Even though this is a factual statement, let's expand the graph again, shall we? Here is foreclosure activity looking back until 2008. So yeah, in 2020 and 2021, there were not a lot of foreclosures. You know why? Because they weren't allowed to. They didn't allow people to foreclose on the homes due to the COVID Act and so many other things. So yeah, they're up 150% from last year, but guess what? If you look at this overall graph, it's still at an all-time low when it comes to overall foreclosure activity. I mean, this is nothing, guys. This is the least that it's been in 10 years, minus, last year when they weren't allowed to foreclose on people. So that is another news headline that just is meant to scare you, and it's garbage. Well, it's not affordable anymore, right? Well, let's dive into that, shall we? So let's just take a $400,000 home. Let's look at, back in 2021, so last year, with an interest rate of 3.5%, your principal and interest payment would have been around $1,796. Your income, again, this is total household income, doesn't necessarily mean everybody that's going to be on the actual loan application, about $9,000 a month. So yeah, it's pretty affordable. Now looking at this year, Home price up 15% from last year. So that $400,000 house is now $460,000. Interest rate is now 7%. That takes your payment to $3,060. That's up $1,264. That is a hurt. And even though wages are increasing, they're still not increasing enough to keep up with it. So let's say we saw an $810 increase in your wages. This is sourced through ADP. So they're basically saying people that stayed in their jobs still continue to earn about 7.8% more. And then people that switch jobs on average earned about 15.7% more. So we're just going to use the lower of the two of that, we're going to average it out to around 9%, which again is still not great. It is definitely more unaffordable. This is just the price of your mortgage. We all know that everything's more expensive right now. Gas, food, prices to go do things. Everything is more expensive. It's way less affordable now. Your money does not go as far as it used to. But let's look at what real estate can do in the long term. Because again, this is our current situation. That 7% interest rate is not going to last forever, as we just determined, because we know that when we go into a recession, we're going to see interest rates get lower. So as long as this is something you can handle for about a year, it still makes sense, but things get better. We actually have some additional options for you. But let me talk to you a little bit more about why real estate is so important. We're going to take a look at just a 4% appreciation on this specific example. So let's say you bought a house for $400,000, you put 10% down. So that's $40,000 that you have invested out of your pocket. If you get 14% appreciation, that's about $16,000 on that $400,000. Well, $16,000 profit on a $40,000 investment is a 40% return. And again, this is just year one at a very low appreciation rate. So this is what I'm talking about when real estate truly does create wealth. It's not about when you buy, it's about buying and waiting. We're not anticipating the future of housing to be ridiculously high like it has been. We're not going to see 15% returns, 16% returns. Could we see 4, like in this previous slide? Absolutely. I think that's a really small number, and it's still valuable, and it still makes sense. Now let's look at rents. Rents are going to go up. Rents are up 13%. So if you had to move out of a rental and go into a new one, you can expect to pay 13% more than what you're paying now. And even if you're going to stay in your existing rental and just renew it, trust me, everybody's in the same situation right now. Renewals are up 8%. So is 13 and 18% on rent renewals higher than 4% appreciation? Big time, which means it's still more expensive to rent in the long term. So what this does is this creates just the perfect opportunity right now. I really can't explain it any further. So last year, let's talk about last year, right? If you tried to buy a house last year, you had to go $50,000 after, over asking price, waiving all inspections, waiving your inspection fee, waiving the appraisal fee. It was a nightmare, and we were up against 30 other people. And it sucked. A lot of people got burned out and couldn't even do it. Now let's look at our situation today. We're having normal negotiations. We're actually having sellers pay for things called seller concessions, which is them paying closing costs, and something called a 2-1 buy down. I have a separate video on that. I'll release that a little bit later. I'll get you the links to it, but the 2-1 buy down is a phenomenal option for right now. Basically what it means is you can buy your interest rate down by 1 or 2% for the first or second year. So let's take a look at this example. So on a $400,000 loan at 7% interest, your principal and interest payment is going to be $2,661. But with that 2-1 buy down, we take the interest rate from 7 to 5% for that very first year, knocking that payment down to $2,147, saves just over $500 a month. Now there's still a cost to that buy down. Everything costs money, right? So it's going to cost just over, 2 points or 2% to get that buy down, about $9,000. But again, if we can get the seller to pay for that, they are paying to get your payment cheaper, over $500 per month, every single month for the entire year. And when refinances do get lower and drop down to 5%, anything, like if you didn't use up that full credit, you actually get a principal reduction on your refinance. So now your refinance just paid for itself when you bought this house, having the seller paid for your 2-1 buy down. So again, this is a huge opportunity right now. This is what I don't think enough people are talking about. So here it is again. Your income's going up. We can expect that to continue, maybe not at the rate we would like it to. Inventory is still tight. There's not a lot of homes on the market. Interest rates are dropping. We're already seeing it. We're already seeing them get better. And more people are going to start to buy as interest rates get lower. So you need to get ahead of the curve now before everybody else jumps back in and we run into the exact same situation that we ran into back in 2021. This is probably from the greatest investor of all time, Sir John Templeton. The time of maximum pessimism is the best time to buy. I can't explain it any more simple than that. We are in an absolute perfect time to purchase a home right now. So do not let the market or the interest rate or all the negative information in the news tell you how to do things, because as I've shown you, there's an excellent opportunity right now, even with current interest rates. If you're looking to buy your very first home, it may not have everything that you want. It may not be in the location that you want, but I promise you, because I've done it myself, if you can get into that house, if it's an affordable payment, something that even if it's going to be a little bit tight for that first year, maybe even 2 years, I promise you that wealth, everything is going to just continue to get better, because you're going to pay your balance down and you're going to increase the value of the home. And as those two things happen, that's going to set you up for such a phenomenal opportunity for the next time that you're ready to buy into that move-up house or maybe turn it into a rental. I mean, the opportunities are endless once you get that first house. So hopefully this information was valuable. If you do have any questions on any of this, as always, I am available, and you guys have a great rest of the day.